Welcome back to the Before Pass and Go podcast with your host, Michael Melfa. Today, I'm joined by Andrew Nguyen, the CEO of Boardwalk Insurance. Welcome, Andrew.
Thank you.
Let me say something. Now Andrew's here. You know, behind the scenes, people don't really realize, but we came up with, we're not going to say it, but Andrew came up with a great idea, and he didn't even know he had a great idea. There may be some merch, and there may be some triggers that I like, but you guys have to stay tuned to something pretty cool. I like it. Okay. Now, guys, we've been doing this for quite some time. We've been doing a lot of videos for quite some time. And the one thing that everyone keeps doing, and we don't answer, is their questions. It's on YouTube. It's on socials. Sometimes I actually get some notices in the DMs, and we just continue to ignore it. That's no good. So today, what we're going to be doing is addressing everyone's questions. Ready?
Sounds fun.
Okay.
Yeah.
Let's start off with Andrew, since he's the guest for this episode.
I wear Calvin Klein underwear.
You know, that's number 3. I'm not there yet. Let me get there.
Not there yet, Mike.
You know, let me ask you something. Do you guys still believe in the brands? And this is something off topic. Do you guys still believe in the brands and them having as much power as they used to? Remember, you buy Calvin Klein, it's Calvin Klein. But nowadays, I don't know if people are still pulled towards the brands anymore. Do you agree or disagree?
Disagree. I think brands still have a lot of pull. Maybe the brands are looking different now, different types of brands. But think about social media, how they've even empowered those brands to carry even more weight. When you see, you know, people you idolize, celebrities, you know, influencers, your friend, your peers, you know, wearing these brands or showcasing these brands, I feel like they still have a lot of pull.
What about you?
I think I agree with you, Mike. I think the brand still, you know, depending on what it represents, I think nowadays people, you know, especially the younger generation, they care about what the brand actually represents. Is it representing my belief, my personality?
Mm-hmm.
Those still carries a lot of weight, and I think it's a form of representation that we're so used to that I don't think has gone away.
Yeah, they want to align with it. They want to showcase their positioning, like Andrew said, and align with that brand, and it's their way of expressing their kind of position,
Like Louis
their
Vuitton
status.
and all that stuff. Yeah, okay, I hear it.
Well, what do you think, Stefan? I'm curious to get your perspective.
So funny enough, I'm actually wearing brand. So here's my perspective on it, and here's my take on brand name stuff. If the quality feels good, and if when I wash it 10 times it's still perfect quality, I'll spend the money. But sometimes if you go to somewhere like Zara, and I'm going to throw them out, you wash it once incorrectly, it shrinks down to toddler size. So I feel, and it's over $100 top. So I think if you're gonna buy brand name, the quality has to back the name itself. That's all.
Yeah, agreed.
Like Psycho Bunny. Have you guys ever shopped there before?
No, but I've heard of the brand.
Yeah, I've heard of the brand. Yeah.
You're paying Hugo Boss price. You want the quality to be at the same level, don't you? So that's why I feel if brands are gonna start cheating us on the quality, like less cotton layers and all, that's all I'm saying.
Yeah, that's a different story.
So that's a little rant that we got out of the way. Now, Andrew, we're going to start right with you. First question. Now, everything I say is quoted verbatim, exactly how it was written. So don't question me about how I'm delivering it. All right, first one for you. Why did my damn insurance go up when I've never made a damn claim?
That's a good question. It's typical questions. It's a question that I get all the time when I'm on the field, you know, talking to clients. There's a lot of misunderstanding when it comes to insurance and the costs, because insurance costs is based on usage, right? Insurance companies are, at the end of the day, companies, organizations, for-profit organization. They're not for profit, so they essentially need to make a profit. And when claims usage goes up, the cost of insurance will go up for everybody because it's a pool. And the way that works is that the cost of these claims are spread amongst the many, right? And that's the misconception a lot of people have, is that, hey, you know what? I've paid for insurance. My insurance has never gone up. You know, I've never made a claim, but why is my insurance going up? That's because you're not making a claim, but that does not mean your neighbor is not making a claim. You know, not your
like
the neighbor. Effort. Yeah, the neighbor 2 doors down. You know, it doesn't mean they haven't made a claim. So if they've made a claim, someone's got to pay for that, right? And that's the cost is spread amongst the many.
Is that how insurance works?
Unfortunately, that's how
scary.
It works. It's not. It's not free.
All right. Question 2 for you, Mike.
Risk sharing.
Is it better to bundle my home and auto insurance, or should I just shop around every single year?
100% bundle. When you bundle, you get, not only do you get the savings from bundling, there's usually, a 20 to 30% discount baked into there when you're bundling together, but you're also getting more premium with one particular carrier. So in the event of a claim, you have some premium to offset it. Because as Andrew mentioned, insurance is based on the insurers making a profit. And insurers, they look at their experience on an individual account, and they look at their experience on the whole portfolio. So both those things are factored in. So if you have more premium with an insurance company, the experience on your particular account will be better because you have the premium dollars to offset the losses, and you have more clout too. They have, they have more premium, more revenue from you, so they're always going to be trying to retain that business a little bit more if it's monoline. So always bundle, and shopping it around every year is just you're doing a disservice in my opinion. You want to build some history, because back again to that loss experience, that loss experience can be based on as far as 5 years, Stefano. So an insurance company can look at what premium do we collect over the last 3 to 5 year period versus what did we pay out. So if you're switching every year, you're not really building up that reserve. Mm-hmm. So you want to keep it steady, and it's also treated very unfavorably in the industry from an insurer's perspective.
Okay. Andrew, now this is interesting. It says, I need to ask you boys something. Why did my insurance company cancel on me after I made a claim?
So,
is that a thing? First of all,
it's an interesting question. I mean, listen, I've had this question on several occasions with clients, and again, like I just want to reiterate the point that insurance companies are for profit, right? And that's what make competitive insurance rates. If we were to have government insurance, we wouldn't have the competition. Premium stays elevated. So competition is good. So we know that. And if you prove to be a individual who makes claims over and over again, they will cancel you. You know why? Because if I'm the insurance company, there's many other individuals that if I keep this individual that have elevated claims on the book, it's going to spread that amongst many. So now everybody with that specific company, their insurance premium is going to go up. So in order to protect that, they will need to cancel those individuals that may have higher claims. So, my advice to the individual that asked this question is go back and look at the claim history. Look at the amount of claims you've made over the years. And if you show a high frequency of claims, even though they're small, high frequency, that's a problem, or high severity claims. We're talking about, hundreds of thousands of dollars being paid out and repeatedly happening. That's usually a problem. So take it from this perspective of an insurance company and ask yourself, would you keep yourself as a client, right? That's my recommendation.
I'd like to add one quick thing to that. That was beautifully laid out, Andrew. Good job. The second part of that component is the mitigation. What are they doing after a claim? So Andrew mentioned, frequency is the worst. Insurers really penalize frequency, but there's also severity, like Andrew mentioned. So that particular individual seemed to have one claim. It must have been either a very severe claim where there was a large payout, or they didn't do anything to mitigate future loss moving forward. That's another thing underwriters look at. You had this claim. What's the likelihood of this claim reoccurring? What steps and measures have you taken to prevent a loss like this from reoccurring? And a lot of clients don't understand this, and this is why you need to work with a broker that can educate you on that, can help you work towards a solution and present you favorably to the markets. And there are other insurers that take on high-risk individuals. It's not like everyone says no. A broker can move you around when needed to the right market and position the business correctly.
Beautiful, Mike. I'm going to stay with you, Mike, and this is an interesting one too. Thanks to COVID, I now work from home. Do I need a different insurance now?
So you still need general liability insurance, but it depends if people are coming to your premise or not. Most likely, they're not coming to your premise. So there might be a little bit of a rate break on premise liability because you don't have patrons coming there. You don't have the slip and fall exposure. I don't insure a lot of home-based businesses, to be honest, but I do know that there's definitely, it's an underwriting factor. The underwriters look at it. They look at, there still is commercial general liability exposure. So they still need insurance, but there probably is some kind of modification factor, Andrew.
So really, just to add to that, Mike, is, it's really depend on the operations. What are you doing out of your home? Are you selling a product? Are you selling a service? What are you doing at home, right? That's going to dictate whether you need liability insurance or not. Really, the definition of liability is that you owe a duty of care to some individual out there, that your customer, that you've sold a product to or offer some services to. So ask yourself, is there an exposure? If you're selling a product, there's product liability. If you're selling a service, there's professional liability. So there's always some protection that you'll need, regardless of where you work, outside of premise liability, which is, when people step onto your property and slip and fall.
Thank you, Andrew.
I have one more question, and then I have one more audience question, and then I got two from me. So one audience question, you guys jump in, whoever wants to jump at this, but if someone gets injured on my property, didn't say it happened, but if someone gets injured on my property, am I automatically liable?
Do you have a shovel and some extra land?
What do you mean?
Someone gets injured on your property. Of course you're liable. If someone gets injured on your property.
It says here, are you automatically liable? So is it for sure? There's no ifs, ands, or buts about it?
Okay, so I'll start, and then Andrew was on the adjustment side, so he can speak to that. As a business owner, when someone's paying for a service or a product, your level of care, your duty of care is very high. So you have a very high duty of care. So if someone gets hurt on your premise, automatically, you're going to have to prove that you weren't liable. So it's going to go through your insurance immediately. And you're probably going to get a statement of claim in the mail from the third-party litigator or third-party representation saying that we're suing you for this, which has happened. We've had these claims before. I've had one, I'll give you an example, where my client, someone tripped on the sidewalk, which was in front of their premise in the summer. And then they found that the client had no responsibility of the sidewalk. That was city sidewalk. But they were named in the lawsuit. And they had this high degree of care that they had to offer because the customer was coming to visit the client. So we ended up having to defend that claim. There was no settlement in the end. There's two parts of a claim. And Andrew, maybe you want to speak about the defense and the settlement. You want to elaborate on that?
Just to reiterate some of the things that you're saying, Mike, is like you owe a very high duty of care if it's depending on the individuals that are attending your property, right? They can be on their way to your property. They can be essentially a customer or providing some sort of service. What people have to understand is, in where we are, there's the Occupiers Liability Act, right? So I just want to say this to every listener out there is that, in our society, anybody can sue anybody, right? All you need is to write up an allegation that says, hey, you know what? I fell here because of XYZ. And it's up to the occupier to defend that a lot of the time.
And incur the defense costs in doing so.
So that now goes into what Mike was saying. There's the defense costs to get you out of that lawsuit if you're not responsible. Right. And you can be, let's just say in this scenario, there could be many individuals that's named on that lawsuit and you can be one of them.
Mm-hmm. But unless there's proof, there's no grounds for it.
There's no grounds, but there's the legal cost that's incurred to.
You still have
you're still always incurring. If you can, like Andrew said, you could sue anyone. So chances are they go to a lawyer. The lawyer is going to sue several parties in it. So they're going to sue everyone that's somewhat related to this claim. So and now is that individuals, responsibility to defend that claim. So they have to incur all the defense and legal costs.
Are you guys fighting this? So that's a great question. So if someone gets injured on my property, am I automatically liable? But let me ask you guys something now. Because they have insurance, do you guys go and fight that? Or do they fight it? And then, how do you guys get involved in that?
So for us as brokers, we don't get involved in obviously fighting these claims, but it's part of our duty to help assist our clients through some of these, events. Like some of these, it's just nerve-wracking for individuals. And I see it all the time with my clients, right? Like when they get a statement of claim, a court letter saying, hey, you're responsible for so-and-so, this is when their emotions come out, and so they just get frustrated. They get frustrated about, what happened. And as our job is to really kind of guide them through that process, so we don't fight it, but the insurance company
The
does.
insurance companies do fight those, Stefano. Yeah.
Right, they will defend it, right? So I think it's
worth looking into either way.
yeah.
Like, make sure that in the unfortunate event that this may happen, make sure at least your insurance is covered.
You loop them in right away. Whenever there's any kind of statement of claim you get, you inform your broker, which informs, or your insurance company, that there's a statement of claim against me, and then they'll commence the process of investigation and defense of the claim.
Yeah, and it's very important. I just want to say is that whenever there is a statement of claim, to notify your insurance broker and notify your insurance company right away, because there's a limitation in time. Like whenever there's a claim that has gone to the court, there's always timelines, and it's very important that you understand those timelines, because they can be at your disadvantage if you miss any of those timelines.
Well said. Now, you already answered one of the two that I have remaining, but this last one is actually pretty awesome to ask, and I've always wanted to ask you guys, because there's always a lot of myths around any industry. Now, what's the one insurance myth you wish would disappear forever? What is the one myth that you say yourself and everybody else, you say, that is the biggest load of baloney I've ever heard in my life? Why are people still talking about it?
Okay, I'll start with one. I think the insurance companies are criminals.
Hey, huge.
That's a big myth.
Are you?
No, it's a myth. And we're the insurance broker, for the record. So we're not the insurance company. However, a lot of individuals think the insurance companies make so much money and they're in the business of not paying claims. That's not true. It's all myth. It's all myth. Insurance companies are making cents on the dollar from an underwriting perspective. So we, Andrew and I both worked on the carrier side, so we got to see the actual insurance companies' profits as well and their financial statements. They make money on their investment portfolio, yes. So you pay your premium to the insurance company, they invest that money and make their greatest return on the investment of that money. However, from an underwriting standpoint, they're typically making very marginal returns, cents on the dollar, sometimes not even cents. We have some insurers that in certain cyclical high claim periods, they're paying out, say, $1.10, $1.13 per dollar collected. So just to give you perspective, they're charging you $1 of premium, and at times they could be paying out $1.10, $1.13 of premium. So they're losing money on the underwriting side. They're not in the business of losing money, as we mentioned earlier. They need to make money. So they usually want to, recoup 10, 20% margins on the underwriting side. So they usually want to operate at like 80 to 90 cents combined ratio is profitable for them. So that's all they're making, 10 to 20 cents. That's their goal, 10 to 20 cents on the dollar from an underwriting perspective. So a lot of individuals are like, oh, the insurance companies charge so much money. They're making so much money. They never paid a claim, but they don't realize the claim. We see the claims that are being paid. The insurance companies are paying out massive claims, and they are at times not profitable. So they're not rolling in all this money. They just have cash flow to make investment income on.
Andrew, do you have one? One myth that you say, what? Why are we still talking about this?
Mike, you took that one off my tongue there. But I do have one that I encounter on a regular basis when I'm out there, talking to clients. Is that, every policies, every broker are the same. So if I go to this agent, I go to this broker, they're all the same. So it's at the end of the day, I'm going to base my decision on what's cheapest. That's the biggest myth I've seen. Because
how would you differentiate that?
And so I think it's, what's interesting is that, I've had a client, and I think this is an interesting one because it took years for this to happen. He has canceled on me. Great client, I have a great relationship with him. And he decided to go somewhere else because it was lower premium. And at the time, I couldn't offer him anything more competitive. And I had offered to him, because, it's a good client. I said to him, I'm like, let me take a look at your policy. Let me take a look at that policy to make sure that you're covered for everything, that there's no problems when it comes to a claim. And I guess he didn't really value that at the time. And you know what happened? 5 years later, he called me up and he's like, Andrew, can you help me? I switched to this new insurance company, and they messed it up completely. They didn't insure my business. They insured my name. So now when there's a lawsuit that comes out, is suing my company, but there's no coverage because it's my name on the policy. So I said to him, like, I'll help you, but like, you have to realize that there was a reason why I asked you at the time to review your policies, because I wanted to prevent something like this from happening to you, right? And so that's why I say it's very important to work with an individual that really knows commercial insurance, to really know business insurance, to really know how it works, right? Because a small mistake that can go unnoticed for 5 years. For 5 years, he didn't notice this mistake, and he just kept paying this low premium. But 5 years later, when he had a claim, he realized that would have been invaluable advice. That would have saved him a ton more money because that claim would have been covered. So that's something that I think is a big myth, and I just want to share the story with everyone because I think it's a story that essentially could happen to anybody.
Oh, that's a good one.
The best episode yet, guys. Listen, Mike, you see that camera right there?
My favorite part?
Your favorite part that I know you're going to nail it now. Okay? So now people need to know where they can find you guys. So this way, if they have any questions, they could call you up and get your insurance knowledge. So at that camera, let's go.
Andrew, where can our listeners and viewers find you?
They can
I
find
want to
me.
hear more exciting stories.
They can find me at www.myboardwalk.ca.
Awesome. Thank you. And as always, you can find us on the web at myboardwalk.ca, on social media, which the handle is at myboardwalk. And if you want to listen more about the Before Passing Go podcast, we are live streamed on YouTube and Spotify. Thank you.
You got it. Until next time, guys, we'll see you later.
Thank you.